so much, Lola. Good to be here. Yeah, I'm here to talk about finance. I'm probably going to talk more about what you can do for yourself, as well as what investors might be looking for, because sometimes it's better to, fund the business from within, as opposed to, be dedicated to people externally. I do have a few slides, and I will try and move through them relatively quickly. In some cases, I'm going to be asking questions. It's nice to get some feedback. I know it's a bit daunting to say things, but please do try and come back when I'm asking questions, or even please do ask questions of your own. I'm sure sometimes when I've got the slides up, it's difficult for me to see when people raise their hands or when they put questions in the chat. But Lola, I'm sure you will stop me and tell me that there's some questions. I would, because I really, that's why I'm here. I really want to deal with what you really want to know, as opposed to what I think you want to know. So please do, let's get to what you want, as opposed to me just talking at you. Okay, I will start sharing my slides, and we will go from there. Okay, can people see my slides? Anybody see my slides? No, yes?
Yes, yes,
yes.
we can.
Okay,
yes.
Great, okay, thank you, great. Okay, so I'm going to start, like I promised, by asking a question.
Please, could you put it in slideshow? Thank you.
Yeah, okay.
Thanks.
I will do that. It means I see less, but actually, I see nothing at all. Can people see the slides? Because I can't see them now.
For me, it's still on, it's not yet slideshow. Okay, slideshow now.
Okay.
Yes, thank you.
Yeah, there you go. Great, okay. It does mean I definitely cannot see hands up. So please, Lola, if you can shout if there's any questions, that would be great. Okay, an initial question. Is there anybody that's willing to tell me what sort of profits they made in the last year? You don't have to be on the penny, but maybe sort of a range. Do you think it was, sort of under 10 million, under 100 million? Where do you think it was? Or if you're not wanting to answer that question, I'd really be keen. I think hopefully most people will know this. If anybody can tell me how many debtor days their business had in the past. And a debtor day is the amount of time it takes people to pay you money on average. So any takers? Nobody knows how long it takes people to pay them when they've done business with them?
Okay, so I could answer that. In my case, most times it's immediately, because I have a policy where you pay about 70%, and my calculations is that 70% usually covers the cost of the painting or the merch before it goes to you. So there are very few cases where I have delayed payment.
Fantastic, thank you. And anybody else?
Yes, so we have Ajo in the chat box saying 8 to 10 days.
8 to 10 days. Great. These are excellent examples of being paid quickly. It does depend on the type of business. Obviously, if you're running a shop, people tend to pay you there and then. But if you're running a consultancy, or perhaps you are in property, or some sort of service business, It might be that, people pay you 15 days, 30 days. And if you're trying to provide to, big organizations, some of those organizations might say, well, actually it's 90 days before we pay you. So it does depend, but knowing what that is really important. The reason I started or asked that question is because having that information is key to being on top of your cash flow. Bear with me, it's taken PowerPoint a long time to move over when I put it in share. So you'll have to bear with me. Actually, you know what? I'm going to take it out of share, otherwise we'll be here all day. Can you see the screen?
Yes.
Yeah. Apologies. I'll have to leave it out of share. Hopefully, it's big enough for people to see what it says. It's just that it's not, my PC is a bit old, so it's not responding when I put it in full PowerPoint mode. Another question that I have is around whether or not organizations that are profitable always have positive cash flow. Anybody?
Ajo is saying false in the chat box.
Lovely. Yeah, that's true. The fact that you're profitable does not mean that you are actually cash positive. You might have a profitable service or profitable product, but because it takes people a long time to pay you, because you've got to go and buy things in the meantime, you've got to pay your staff in the meantime, it might mean that you are cash flow negative whilst you are building the product or delivering the service before you actually get paid. So it can be that it takes a bit of time. And in effect, what we're doing is we are extending a bit of credit to our customers effectively. Okay. The problem with that is that organizations that don't keep an eye on what's happening with that cash is that they can actually end up over trading, and over trading can lead to closure because you have, you've got too many people that you need to pay and it's taking too long to actually get the money in. And all you need is one large customer to go bust and you are sunk and you're in trouble. In fact, sometimes even just, having a factoring company can create even more problems because that's sucking some of the profit out of the business. But I'll go on a bit further. And I'm going to skip this question because I think I've asked enough questions. I'm going to move over to how you might be able to increase the cash flow in your business. And there are lots and lots of options in order to increase cash flow. Some of the more obvious ones are around, selling more. If you sell more, you get more money. If you try and reduce the costs, you get more money. And those types of examples are profit and loss examples. So you are, trying to get more profit out of the service that you're providing by either increasing the price or increasing the volume or reducing how much it costs you to actually deliver that service or that particular service. What is not usually very obvious to most business owners is that there's things you can do with the balance sheets. And that goes right back to some of the things that I talked about earlier on, which is around how, how long it takes to actually get money into your business. So some of the things that you can perhaps do to use your balance sheet items to make more money is to try and ensure that you reduce the number of debtors you have, or at least improve how long it takes for them to pay you. So if you are dealing with organizations that would normally pay you in 30 days, then if you ask them to pay within 15 days, it means you've got that money quicker into your business, obviously, you know, and therefore you've got more cash to pay the people that you need to pay. But even more interesting is your work in progress. Lots of organizations, especially smaller organizations, have lots and lots of projects on the go that are not quite finished, and therefore you can't bill, or, you know, because you haven't finished. But what you've got there is a lot of money tied up in work in progress. And so finishing pieces of work and billing for them and getting that money in is a good way to actually bring money into your business quicker. Sometimes it makes sense to actually finish what you've got before you take something else on, in order to ensure that you are able to, you know, improve that cash flow, than to, you know, keep taking on lots and lots of, you know, new pieces of business and spread your staff too thin. And therefore you've just got a lot of supposed money in work in progress, but it's not on your balance sheet. You can't use that money effectively. The other thing is, if you are in, you know, if you make things and you need to buy materials in order to make those things, then being very sensitive to how much you buy and how much you store can make a big difference to your cash flow. Because if you've got money tied up in storage, you know, sacks of rice or sacks of whatever it is, then again, this is money that you could have used for something else. So if you can come to an arrangement with your supplier to say, well, actually, you know, I don't want you to supply me 6 months worth of cement at once. You know, I want it a week in advance and no more, and we will pay on the basis of what you have supplied. Then you are freeing up a lot of money for yourself to use for other things. Finally, the other thing you might want to consider is, you know, if you've got big assets that you know, that are on the balance sheet, you can decide to sell them and get that cash and then just lease. So you are just paying for when you're using it, as opposed to just having that money tied up in the balance sheet. So those are some, you know, ideas as to how you might be able to increase cash flow in the business. I guess the ways to think about it, and these are really just describing again what I've just talked about, is you want to minimize your debtors. If you can persuade other people to let you pay them later, so maximizing your creditors, then, you know, do that, but obviously keep within the terms you have agreed with them, because you know, you don't want to be on the other end of that equation. Like I've just talked about, your stock and your work in progress, you need to keep that to a minimum. If you're dealing with any organizations that need prepayments, if you can keep those to a minimum as well, it's a good idea. Like the lady said earlier on, she gets 70% deposit before she even starts. You want to maximize opportunities to get deposits. And also, when you are choosing which customers you want to work with, you might want to think about their payment terms as part of your decision as to whether or not you want to work with them. A bit more around how to minimize your debtors. So you make sure you get the credit terms right. So, you know, do not just, you know, they say 90 days and you say, yes, that's okay. If you can negotiate that, then please do negotiate that. Make sure that you understand that they actually do pay within the terms that they have created, because there's some customers that, yeah, they say, you know, they'll pay within 30 days, but actually they still don't stick to that. You also need to have a process for collecting. So don't just assume they will pay on time. You need to make sure that reminders are sent to them and you enforce the terms that you have agreed with them. And if they don't, then you need to be willing to stop supplying them. I was going to make us do an exercise, but I'm conscious of the time that we've got. So I'm going to skip over this exercise and move on to the next piece, which is around how we maximize the creditors. So again, like we talked about earlier on, it's around making sure that you are very careful around what terms you want to agree with them. You want to make sure that you keep the cash you have within the business. So wherever possible, keep the terms as long as is, you know, as they will agree with you, but stay within the terms you do agree. Your stock and your work in progress. Negotiating terms with the suppliers for just-in-time delivery. That's an interesting one, because that assumes that you have processes in place to make sure that you know when you're going to need the supplies. You don't have to have them sitting around. So one of the things that this means is that you need to understand your production processes. You need to understand how quickly materials move through your process, so that you can actually plan ahead with your supplier to have that stock coming in when you need it. Depending on what you do, you might be able to automate that control. In a lot of shops these days, you can automate when you actually buy from your wholesaler, because you know when you've got, you know, just a few on the shelf. So it's definitely something to consider, because again, it means you're not sitting on large amounts of money that's not doing much for you. Okay, I'm going to skip this slide because again, it's questions. The next thing I'm going to talk about is how to work out what cash flow you need in your business. This can look complicated. It doesn't have to be. I'll start out with something that looks a bit scary. So on this sheet, what we're doing is we are using the profit and loss to start to estimate whether or not a business is going to need money. So, you know, they expect to sell, you know, 2,000 a month in the first few months, and then it goes up, and you know, they've got all these costs going out, and they can see that in terms of profits, you know, initially they are not making, you know, obviously they're making a loss because they've got all these expenses, but over time they start to be able to make some money. And using this profit perspective to calculate how much you need can be slightly deceiving, because you think that, oh, well, all I need is to be able to cover this amount of money, and then I'll be laughing and everything will be fine. But actually, depending on the sort of business, what you really need is an actual cash flow, which looks at when the money is going to come in, not just how much the money is. And in this particular case, the money is actually coming in slightly later than when the sales are made. Whereas, you know, obviously the things that this organization is buying, because they're a new business, they are paying a lot of their money out very early on. So actually the money that they need at the peak of it, it's about 17,000, whereas on the previous sheet, you know, they probably thought they needed around 10,000. So taking account of the timing of when money is going to come in and the timing of when money is going to go out. That's what a cash flow forecast does for you. And it gives good visibility as to whether or not you need money, whether or not you need to look externally to get that money into your business. Now, it doesn't have to be as complicated as this slide looks. It can be something really, really simple. So, just date is, what's coming in, what's going out. So it can be something like this. You're paying out so many things on this day, and then you're getting some money from a customer on, on that particular day. And therefore, by the end of that day, you're still balanced. But, it doesn't, what I'm saying here is it can be quite straightforward. Just put down exactly what's going to happen when. But it's vitally important to have that visibility in order to understand whether or not you can afford the things you want to do. And sometimes you've got quick decisions to make around being able to do things to deal with a crisis. And having a cash flow gives you much more flexibility in terms of knowing whether or not you can spend the money you've got in the bank, or whether or not you need to look for another source in order to progress with that. Do I have any questions at this stage? It's all very, very clear. Good. Okay. Okay. I think I will skip that particular one. Yeah, I'll skip these again because I want to talk about where we can get money from. So this is the bit where I talk about what options we might have in terms of getting money into the business. And typically it can be, sort of loans. We all know we can approach, banks for loans. Banks typically do different types of loans. They do what they call working capital loans, or they do, big loans. So yeah, step change type loans. Can anybody hazard a guess as to where or when they might need a working capital type of loan?
You can just unmute and ask the question or make a comment if you want.
Yeah, please feel free to shout. Okay, I'll give my 2 penny worth. Basically, when we're talking about working capital, we're usually talking about a need that is expected to disappear within a matter of weeks or just a few months. You have a very short-term need, maybe because you're expecting somebody to pay you soon, and you're sure they're going to pay you, but it is just not as soon as when you need to spend that money. Or perhaps you are taking on, you're trying to take on a big contract, and you know that as soon as you have settled into that contract, the profit from it will actually rebalance the books, as it were. So the sorts of tools that are used to deal with that sort of short-term need tend to be an overdraft. So, normally your bank account has money in it, and an overdraft just allows you to spend money that is not yours. So you spend the bank's money, yes, they charge you some interest on it, and once you get paid, you're back in credit again, and they're not charging you any more interest. Sometimes it might be that you need something that is going to last a little bit longer. And that's when you start to talk about term loans. But actually, I'm going to go back a step. because I want to talk about trade finance and factoring and discounting. And this is typically used by organizations that are dealing with businesses that always ask for time to pay. So maybe you are selling into an oil company, or you're selling into a large, organization that tells you, well, their payment terms are, 60 days or 90 days or whatever. And that means, it takes a while for you to actually get your money in. And what you can do with a factoring company is the factoring company buys your invoice from you. So they basically, if you had an invoice for 100,000, they might say they'll buy it for 60,000. And they'll give you, so you give them that invoice as soon as you've billed the customer, you then give the invoice to the factoring company. Instead of them giving you 100,000, they will give you 60,000. And then when your customer pays, they will give you the balance less their interest. Now, charges can vary. It might be that, the balance that you end up with is maybe just another 20 or 25, and they keep 15. But what they've done for you, obviously, is it means that you've got at least 60 to work with, as opposed to nothing at all until the company pays. It's expensive, but it's a way to get money into the business if you are having to deal with customers that will not, agree the sort of terms that you need. Trade finance is similar, but it's more in terms of being able to work with companies, with suppliers and businesses that are overseas, but it's very similar. And then I'll come on to loans, mortgages, hire purchase. And these are all bulk amounts where you basically secure a large amount of money and you pay it off on a monthly basis. And of course, there's interest added to the payments that you make. So you end up paying more than what you borrowed, but that's just par for the core. The thing is, you just need to be quite clear about what you're going to use the money for, so that you choose the sort of finance that makes sense for the way you're going to use the money. So if you've got a hole, in your budget at the moment for, I don't know, a few thousand, you're going to get money within a few weeks, it doesn't make sense to take a 3-year loan out when you're going to have that money back in a few weeks. So it's really horses for courses. Now, these types of funds are usually backed by something. They are either backed by the invoice that you are using for your factoring, or they are backed by assets within the business. But when you talk to a bank, they will ask you for security of some sort, basically, because they don't want to be exposed if for any reason at all you stop trading, or you're struggling. They want to have a way of recovering their money, so they will ask you for security. In some cases, the security is the thing that you are buying. So if you are doing a hire purchase on a big lorry, for instance, then if you stop paying, they'll come and collect their lorry and they'll call it even. Same thing with equipment, machinery, and so on. You can do that on hire purchase, you can do it on leasing, but at the end of the day, they can come and collect that equipment. And depending also on the type of equipment and how quickly that equipment might depreciate, they might also ask for additional security, because even if they come and collect it, it's not as much as what they're exposed to. So you might find that that's the case with all of these sorts of finance. If you are wanting to look for finance without necessarily needing to put down security, then you're in the avenue of equity type of finance. And in effect, what you're trying to do at this stage is you're asking somebody to trust that your business is going to make them a lot more money, so that they can advance you money. They buy a share of your business for that money that they've advanced you. And as the business grows, their equity, their share in the business grows. So, they buy 10%, and, when your business is now, X billion, they've got 10% of that X billion. And it's very tempting and very attractive to a lot of business owners to look for this sort of funding, because they don't have to have security to back it. The security is the business itself. But if you look at it from the equity provider's perspective, they need to be extremely sure that they will get their money back at the bare minimum. But in almost every single case, they want a lot more. And that, I think, is the difference between business angels and private equity providers. Business angels are sort of lifestyle finance providers. They are doing it from their own perspective, from an individual's perspective. And yes, they want their money back, definitely. They want their money back, and they want to make a profit. They're not doing this, or hardly ever doing this out of the kindness of their hearts. If you want out of the kindness of their hearts, then you probably need to be talking to your mother or your brother, those sorts of people. But in terms of, people that are formal business angels, then they want their money back plus more. So they will be looking at your organization and looking at what the probability is that they will be able to get a great deal more than what they are putting into it. And you need to be in a position to provide them with evidence that will make sure, give them comfort. Business angels, typically they'd want, anything from 3 times to 10 times what it is, they are providing you, usually in a period of about 3 to 5 years. Venture capitalists, private equity providers, they are not dealing for themselves. They are managing cash that they have been asked to manage on behalf of pension funds, investment organizations, and they must provide, a substantial return on the money that they are investing. The other thing around venture capitalists is that, in addition to having, these other organizations that provided the money in the first place wanting a big return, they obviously want to make money out of it as well. So the return that's needed starts to multiply, so instead of wanting sort of between 3 and 10 times what they invested, they're wanting sort of, 100 times what they invested, so they're looking for those unicorns. They're looking for organizations that are really going to, explode and grow exponentially. And again, they need evidence, to show that that's going to be the case. So, the sort of information that you would provide to a bank that is just going to ask you for some security, it's probably not enough for a business angel, and most definitely not enough for a sort of venture capitalist or private equity provider. Do I have any questions around this? Okay. Okay. Quick questions then. Well, are there questions? No, this is just a summary, really. I didn't talk a lot about grants. That's because at the moment, I'm not quite sure how much there is available in terms of grants in Nigeria, so I haven't gone into it. But typically, from my experience, grants are not quick to get. If you are in a hurry, then your initial option will be to think about loans if you're in a hurry for money. Grants are not quick, equity is not quick. If you are thinking about security, then grants don't need security, equity doesn't need security, but loans usually need some form of security. In terms of the amount of money that you're looking for, yeah, any amount usually for grants and loans. For equity, you know, usually it needs to be a substantial amount. They are not dealing in, oh, I just need that quick 100,000. You know, they are dealing in the millions and upwards, probably billions, because, you know, they are looking at organizations that are going to grow substantially. In terms of the sector, it usually doesn't matter in terms of grants. Obviously, it needs to be a sector that that grant provider would work with. Loans, it can be any business sector, it doesn't matter, because there will be a provider that will deal with that sector. In terms of private equity, again, it has to be the sector that that equity provider knows and understands and wants to work with. In terms of the market size, so the sort of market that you are dealing with, in most cases, you know, so grants and loans, it doesn't matter to them. If you are looking for business angels or private equity, then they will want to know that you are working in a market that is extremely big, because that's the only way you'll be able to grow to the sort of size that they need in order to make the sort of return that they're looking for. Any questions?
What kind of finance, or where should I look for finance? Because I'm going back to the manufacturers now. What kind of finance instrument should I look for example, if I want to go for exports? Because we get a lot of questions on exports, typically we're either doing creatives, which involves manufacturing, or yeah, we're mostly small scale manufacturing and then services.
Okay.
So, yeah, what kind of financing could we be looking at?
If you're looking to export, then it would be trade finance. So, you know, if you've got a customer that wants to buy, and what you're looking to do is, you know, finance your ability to create that product, then you would be looking at trade finance.
And would that typically be through your bank, or?
Yeah, you can. I'd start with your bank, but you can also talk to some of the. Niger has something like DTI, doesn't it? Yeah. Exactly. They should have some programs where they support people that want to export and actually help them to expand. I don't know how quick it is to get, but there certainly should be, yeah.
Thank you. I don't know if that's relevant. Yeah, I'm just trying to run through the types of participants we have online.
Okay, thank you.
Since they're not asking questions, but it's been a long session, so we started at 9, so maybe next time
I'm a bit tired, yes.
I think maybe we can get them to jump up and down or something. Okay, sorry, I'll mute myself now.
No, that's helpful. I'm just about done in terms of the slides. In fact, I'm going to stop sharing for a minute, and maybe if you can see me properly, maybe. I've gone over quite a lot of material just now. and I am also conscious that I was going fairly fast. I'd really appreciate questions or just suggestions or thoughts, as to maybe things that I've said that you think, oh no, that can't work. Let's explore those things.
Thank you, Bambo. I was actually hoping that was really good. Your voice is so calming. It's just like everybody is still and listening and all of that. Really, really good presentation. I was actually hoping you'd say something about the grants aspect. But I think in a nutshell, you actually made it quite clear that those take a lot of time and all of that, and effort and a lot of thought process and stuff. But that was actually what I was hoping you'd talk about, but never mind.
Yeah, so on the grant side, the first thing is that you need to be very clear about the sector that you're supporting. Grants tend to want to work with organizations that are sort of supporting maybe, a particular sector or a charitable type of, support. And they tend to look at particular areas. So some grant providers only work with organizations that support children, whereas others want to work with people that look after hospices. So it depends. So you have to identify the right sort of grant provider in the first place. And I think really that's where the time goes, identifying the right grant provider and then providing them with evidence about the support that you're providing and how many people you're helping, what the outcomes are from the help that you're providing, because that's what they want to see. They want to know that, at the end of the day, they are putting money in that's going to help people, whether it's children, ill people, whatever. Grant providers don't need, they don't need to be repaid. It's a grant, so so that's a good thing, and they don't look for security, but they do usually look to make sure that you have a good governance structure in place to make sure that the money is actually spent the way you say it would be spent. So you're able to show evidence, before and after about how you've made a difference. You're welcome.
So Amama made a comment, which is very true. So she's saying, so it's basically good to be cognizant of SDG and ESG because a lot of financiers are looking out for this.
That is very, very true. These days, it's becoming more and more important that you can show that you have thought about the environment, you've thought about the people you work with. All of those things are very important. And especially if you're looking to export as well, then being able to provide enough information so that your customers can trace everything all the way through is very important.
I would like to add a point here. ESG has been seen as a major driver in every country. And I would like to add that we are part of one of such initiative in Singapore.
Fantastic. So I know in Nigeria, it's still very young. It's still very young, but we have government agencies that are focused on SDGs. We have grants. There's some popular ones from some of the banks. The Tolu Elumelu Foundation, they give grants, but like obviously Bambo said, you have to be cognizant of where the organization themselves are putting the grants to. So I know that we have a lot of the foundations. So Bill Gates, which other one? So we have Gates Foundation, we have Ford Foundation, we have MTN Foundation. So a lot of the large organizations are giving they are giving grants, but of course it then now also feeds into their own SDG or ESG goals. So you have to look at your business model canvas as well and see how you can feed into that, so that you can tap into some of those things, because it is free money, and as Nigerians.
No, that's a global opportunity. Actually, it's not only in Singapore I'm talking about, it's a global opportunity. You talk about any country, they are more concerned about working on this. And the electric vehicle EVs are getting in adoption. That's major. That's having a major impact on the infrastructure of electricity. So no country has an infrastructure to support that kind of EV infrastructure to put up charging points in every place. So that there is a major impact on a huge capex which is involved. We are trying to solve one such problem in Singapore, try to shut down the demand-based load usage within the premises in the flats. They have a amazing way of sharing the power load concept, where they have a 2 transformers at 50% load for adjacent blocks. In case one fails, the one transformer takes 100% of the two blocks, so that there is no power shutdown. If there is a power shutdown, the president comes and apologizes for it. That's a country about Singapore.
No comment.
So,
no comment.
Mama made a point about the fact that internationally fossil fuels are out, essentially, but I don't know, here in Nigeria, I don't know how we're going to cope with that. But yeah, so most fossil fuel related projects probably won't have that much financing. So that's why there's a drive towards renewables. So that feeds back into what they're saying, what we're saying about understanding your environment and the trends that exist in your environment, so that you can be in front of those changes, for example, before it happens to you. So if yes, you are in power, exporting crude oil right now from Nigeria, well, in another 10 years, you need to.
Yeah, it's not a growing sector anymore. Yeah, it's not going to disappear overnight.
Yeah,
but you can't rely on it for growth. Yeah.
Or because that might be an opportunity, for example, because a lot of the equipment that are being manufactured are to EU standards or US standards, and they want a lot of it to use less fossil fuels. But we're here in Africa, we have the fossil fuels. If we can put our eyes to the fact that we're damaging the environment, I know Ajo is about to bite my head off. We might be able to create our own generators, but very soon we will not be able to use the generators that are coming in from the Western world in Africa, or it will be too expensive, for example, and all that.
Yeah, I think at the end of the day, it's really been very, what's the word, creative in terms of looking at where things are likely to go, what people need to do, where are the pain points. It's whatever the pain point is, that's where people will spend their money, because they need to, find a solution. So yeah.
Interesting.
Something, but solar panels might be something else. So it just depends. Yeah.
It depends on what we want. Yeah, that's an entirely different conversation. We don't seem to want the growth anyway. So how do we start these conversations around moving away from generators is what we should be saying, but nobody's even having those conversations right now. But that's for another group.
We're here to be able to empower our participants to know how to put in structure for their businesses so that they can grow and start to ultimately export, manufacture export their manufactured goods across Africa, across the world, using technology to make it a lot more efficient. And yeah, so that's in a nutshell why we put this, to start the conversation, to get people to start thinking about how they need to use their people as assets and technology within the organization to develop and improve on their business models and for growth. Because without, everybody now knows in Africa, the entrepreneurs are essentially drivers of the economy. So we are here to stay, and if there is money that is looking to come into Africa, but they can't seem to find companies where they can put the money in because of things like processes, especially money management.
Yeah, we have to get the fundamentals right in order to be able to work with people that expect, they expect basics, like being able to, demonstrate that you've got the right governance in place, so that's right. People demonstrate that you are looking after your people, demonstrate how your processes work. Those are the sorts of fundamentals, because they get asked questions as well. The last thing they want to happen is to appear in the Guardian that they've been trading with this organization in Nigeria who's been using slave labor, or who, so they need that comfort. So we need to gear ourselves up to provide them with that comfort. But then, as long as we do, then, the world's our oyster.
Yes, and
actually, and let me just add one last thing, Lola, is that we need to be, everybody is saying how Nigeria is an informal sector. We need to stop having those conversations and just do what's right, really. And how are we going to be globally competitive if we keep saying, oh, we're informal people, blah, blah, blah. So I think it's time for that change, long past that time. Yeah. Stop making excuses for ourselves. We keep making all these excuses.
Exactly.
Okay, I think if there are no questions, we've got the panelists here ready to answer any questions there, but if there are no questions, we'll be rounding up. I would appeal to everybody to please give us some feedback, because of course these are data and insights which we would also use to improve on ourselves. So there's a feedback form that's been put in the chat box. Please fill that out. If you want the links to this recording so you can go back to it and improve on yourselves later on, please put your email in the box. It's only the people that we have the emails that we will be sending the emails to. Thank you so much, Tomilayo. And yes, I think if everybody filled out the feedback form, I think I'll just leave it on for another 10 minutes and we can talk or ask questions while other people are filling out the feedback form. Any questions, anybody?
Not for me.
Oh, I should tell you a little bit about everybody on the panels. Actually, I think we missed that because we're so excited about getting into the meat of what we're doing in this particular conversation. So actually, instead of me telling you about everybody here, I will let everybody tell you a little bit about themselves. Maybe something that's also not in their bio might be interesting. So who wants to go first? Ajo, since you're
why me? Ask Bambo can go first.
Yeah, I don't mind. Let's see. I'm not quite sure what might have been in my bio anymore, but I've been in consulting for too long. And I have worked with both tiny organizations, so one-man bands, and big banks and big insurance companies, global organizations. I also coach. I coach usually people around how to expand their organizations and also how to look after themselves as an individual. I got into coaching because I did nutrition, so I sort of pull all of that together. But my big thing, I think, what matters to me is that we realize that we can all pave our own way, where we are not victims of colonization. We don't need to be victims of colonization. We are just as able and just as powerful as any other organization or any other country, as long as we are disciplined. Yeah, as long as we're disciplined and we do what needs to be done, we will surpass, because we're just so clever. So we will surpass what's going on. So that's a really strong thing for me, and you know, being able to work with organizations that really want to make a difference, you know, makes my heart sing. A piece that people might not know about me is that I love step. Most people don't know what it is, but it's like dancing, but it's on a step. And that's my passion. There you go. That's me.
Interesting.
Thank you very much, Bambo. And I should also say that Bambo is my business partner with Platinum Integration. So Platinum Integration is our consultancy for the larger organizations, and Amano is for the smaller organizations. So we created that to be able to make it more affordable to organizations to start to think about their business processes. So over to Perry. Do you want to tell us a little bit about you?
Okay, I come from a diverse background. I started my career as a network guy, and I've been managing a large organization's IT infrastructure. Then I got too bored with the monotonous job, and I started my company to work on different domains. I've been working on in manufacturing, from automobile to aluminum plants to milk dairy industry. I mean, we always sit and work on different sectors every time, and we do custom solutions for large organizations and small organizations. And we also support India's first chainless cycle brand. We help them in their manufacturing side, getting the data, also in the supply chain side. So we provide solutions, software applications also. Said this, I am advocate for regional-based electronics, where I have an R&D division where we do custom electronics for large problems. We have worked in energy sector for both wind and power. We have done a lot of custom solutions with Siemens Gamesa for last 10 years. And I've been working with the automobile providers, doing consulting for automobile providers. And as well as in financial sectors, I take care of automations in terms of robotic process automations, where I help predominantly on open source based automation is what handled by me. Anything with open source, how to keep the cost low, yeah, I'm the right guy to speak with. So it's more of value-based. It's a value-based solutions than the. I mean, it's. I wouldn't say we are cheap. I would say it's a value-driven solutions what we advocate for, and we always see a larger picture for a business. We are not short-sighted. We align with the larger business. We want to travel along with the business. That's how we work on.
How do I compete with that? Okay, thank you. Okay, I've been in international development before I started doing HR, and the pull for me in HR was because I felt that we have so many skilled people in Nigeria, and yet nobody was paying attention to that entry level side of things. So while we also do executive recruitment, my focus is really on the schools and the universities to get them job ready. So I have this concept called Job Red, which is basically how to get ready for the workplace. Now, in addition to that, I'm an advocate for happiness at work and productivity and all of that, because in this part of the world, I think I'm actually going to stop that conversation in this part of the world because it's making us sound a bit negative or whatever. But in this part of the world, a lot of employers don't pay attention to their employees in terms of their well-being and all of that. But I think that is changing a lot now with the COVID and stuff, which is why I'm such an advocate for the wellness and well-being and all of that. In addition to that, I love youth investment, so that's why I'm doing what I do. And quite interestingly, I'm now working on a project that is looking to train 1 million tech people across Africa. And it's really exciting for me because it also means that there's possibility for any Nigerian business to actually go into these other African countries in terms of all the partnerships and so-called after that we are still waiting to happen. So that's where I'm sitting, and where people are concerned, I love working with people. So anybody who has a people need and any kind of upskilling is where I sit. And then lastly, obviously, is the ESG aspect. I think that in the sort of conversations I've had with Lola, we need to be encouraging small business owners to actually have some kind of an ESG strategy within their organizations, particularly for our own solutions, as well as for potential investment. Enough said. Thank you.
Great, thank you.
One point to add, for our businesses, always try to add some social impact with your business, so that takes you a longer way in your business. So more than you, the people around you will promote your business.
Exactly.
Exactly.
And inclusiveness in the business. This is one thing which we would like to see, and that plays a major role in success of a business.
I agree.
You need to have an ecosystem built around you, which helps you to scale over a period of time.
Exactly. Yeah.
Okay, thank you very much. I think I spoke about myself earlier. So yes, my name is Lola, and I have been in, I don't know which sectors, power sector, healthcare sector, agri sector, working with small and medium-sized organizations for over 15 years, both in Nigeria and the UK. And yes, I'm more interested in making sure people have processes and structure in their businesses so that we can have more sustainable African-owned businesses doing great things in the world. That's me in a nutshell. So I think everybody should have finished signing out our feedback form. And yes, please feel free to join our community on Instagram and Facebook to get to know more about us and how we can work with you. And yes, send us emails and subscribe to our newsletters, because we're always sending out freebies. That's part of my own social impact. So I will take the time now, and if everybody could do me a favor and just turn on their screens, and it would be nice so that at least I know what people look like, because most of us are just our names, and then we'll find out those ones are actually there.
Are you gonna do a screenshot or?
It'd be nice. I've seen it done places and everybody just waves, and it's really nice where you see people waving, and you know, as we're saying bye-bye to everybody, and it's just nice to it's just nice to actually. Yes, and I promise this time next year it is going to be a physical event so that we can actually see people face to face, or maybe a hybrid of some sort. Thank you so much, Kenneth Okeke and Amama. I know Abimbola had said she was at work and she couldn't share her video. But yeah, thank you so much, everybody. And yeah, we'll see you soon.
Thank you.